What's going on, guys? So we're going to take a look at the SPY, the S&P 500 ETF. So what I kind of want to look at here, a lot of talk on Friday. Bottom is in. Bulls never, bears never learn. This is always going to be a bull market. Yada 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 yada. Buy this, buy that, buy that. Undervalued, undervalued, undervalued. Guys, first off, I don't think that the selling is over, and that's just not me giving, my opinion, just based off looking at the macro charts here. If we really take a look at if we take a look at the monthly time frame, we broke a very, very significant level of demand here. This 20-day moving average on the monthly time frame has not been breached, going all the way back to the COVID 2020 pandemic. Short-lived a little bit of pullback correction bear market that we had there. So, realistically, for a year and a half, almost 2 years time, we've been riding this 20 moving average all the way higher. And in fact, pretty much, power trending on the monthly time frame over the 5-day moving average. So now that this level has been breached here, the only reason technically why we bounced is we had a support here, which is a linear regression channel 50. If you guys know anything about the way that I trade in the moving averages and supply and demand and price action, so forth and so forth, you would see this coming from a mile away. This is the first test of that area. That area was 386. We do have room to bounce. We have room to bounce into that 406 and 411. And I think it's going to be somewhere in there that we do start to stall out. And then now, at least test that 386 one more time, if not break it. With that being said, we can't start to call the bottom or say, it's, a generational opportunity of a lifetime, start loading up on stocks until we at least reclaim 430. That's a long ways away. I'm not even going to get into the 430 talk here because it's such a long ways away. It's all about baby steps. It's all about, trading one day at a time. And if you're an investor, your outlook is going to be completely different than mine. Okay. If you're an investor, yeah, you do want to start nibbling in on some positions here. If we do break the 386 one more time, you want to take a nibble. If we do get down into that 370, 380, 350, so forth and so forth, you do want to be nibbling on the way down when there's extreme fear. Now, if you're a trader, you're looking at this market completely different. It doesn't matter if the market is going up or going down. What we care about is what's happening tomorrow, what's happening today. We're not concerned about what's happening in a week. We're not concerned about what's happening in 2 weeks. What we want to know is, what is the chart showing us? Where can we potentially get in, find a trade, and make some money for tomorrow? That's it. We will analyze the data at the end of the day and then come up with our game plan for the following day. And then we just rinse, wash, and repeat. It's why I love trading over long-term investing so much more, because if you really start to understand the charts from a technical basis and a technical standpoint, you can really take advantage of them in a big way, especially if you're playing options. With that being said, getting a little ahead of myself here, let's go ahead and take a look at the 1 hour time frame, because what we're looking to see here is where potentially can we get in and make some money for tomorrow. Now, the bounce on Friday that we had was very, very nice. I do think that we do see a continued bounce, maybe 1, 2, 3 days, somewhere within that time. Again, like I said, I'm only concerned about tomorrow, but I can see some sort of bounce. What we would need to see between now and the overnight futures session and going into the pre-market is we need some help from the overnight futures. And what we need is a pullback. Now, looking around on social media, you can always spot a new trader, because a new trader will be depressed when the futures are down and they will be excited when the futures are surging. Now, here's the problem. If futures surge now, it's going to take away all of that price action, that juicy price action that we want as traders intraday. It's going to take that away because, 8, 9 times out of 10, it's going to get rejected at supply. You're going to buy in, you're going to get trapped, and then it's going to roll over on you. The best possible scenario for any type of bounce, if we are going to get, a 1, 2, or 3 day, kind of temporary relief bounce here, is we need help from the futures to pull this move back down. So you can see here, since futures opened, we kind of topped out right here on Friday's highs, and then we have 3 hours worth of pullback, which is very, very good. What I would actually like to see is, I would like to see us get down into 397, even 395. This would be your best possible solution is if we can wake up in the morning and look at the futures and we're trading somewhere around 398, 397, 396, that's going to be fantastic. We want to get that opening range flush, and then we want to catch support here. And as long as we hold this going into that second hour of the day session, we want to see that reversal bounce. Now if we get that reversal bounce, we can use that hard 395 as our level of kind of as our guide. As long as we can get a bounce off that 395 on the SPY, then we can look to play this move back up to the top side. First area of profit taking is going to be somewhere in here, right around this 403. But the big level that I want to see here is this 200-day moving average that's declining here. It's also going to cross-reference with these two tops here, and that's the big area that we need to see. So what we would be looking to do is play the bounce either on the ETFs or your related stocks that you like to trade, but we want to see this bounce happen, and this is where you're going to want to make money on the long side. Now again, if you kind of notice this line that I drew, this is going to represent 1 day of price action, 2 days of price action, 3 days of price action. Am I saying that we're going to get all the way in here for 3 or 4 days? Of course it would be nice, but all we're looking for is what's going to happen tomorrow. So what I want to see is a nice flush, and then I want to see this level hold, and I want to see this reversal happen. Now I'm going to be looking to take profits into the 406 zone. And if we get over the 406 zone, this is going to start lightening the load for the bulls. And it's going to be, the next area of supply that we're going to be looking for. And again, we won't know that data until the market closes tomorrow, so we can kind of better analyze and see the situation of what's going on. If the market does something like this, where it decides to hold here in the overnight session, and you wake up and it's pre-market and we are bouncing and we are back into this 403, 406 zone, this is the last place that I'm going to be buying long. I cannot just buy long off the bell just for anticipation of some kind of rejection and then the bigger move back down. If that happens, then the move will look something like this. So just keep it in mind, and this is just something to kind of play with here, but you have to understand your levels. Obviously anything below, okay, so we can play both sides of the market. Anything below that 394 is going to be a short position. So if we do somehow do this, anything below 394 is a short position, and this is where you're going to want to make money shorting the market. So I hope this information has helped you. Make sure to subscribe to my YouTube channel. Also join that Discord, guys. That link is down in the description box below, and I will see you guys on the next trading video.